Hey everybody, Economic Ninja here. I hope you're doing great. I'm here with Neil McCoy Ward. Hi Neil, how you doing?
I'm good, but I don't know what's going on right now.
He really doesn't. And he's not happy about this. I have gotten one question from so many different YouTubers, and they say, seriously, how do you come up with your content? What kind of research do you do? And I go, nothing. And they're like, no, come on, there's got to be something. How do you work with your camera angles? I'm like, what camera? I've got a cell phone. And they're always blown away, right?
Yeah, because I spend like 5 hours making a video.
Yeah.
And you said you do 5 minutes, and I said, nah.
And so I figured this would be fun. I've never done it this live, even though this isn't live. I wish we could, but with today's time in Isle of Man, I think in California, it's like 5 in the morning. It's too early. So I'm going to put you on the total spot, and you're going to give me a topic to do a 5-minute video on. What should I do? Let's talk finance, anything in the finance realm. Because the reason why I ask you this is because my background's pretty diverse. I've been invested in almost every asset class around the world, except I didn't go really heavy into bonds. I really don't know a ton about bonds. I understand the fundamentals, but investing in oil, stocks, crypto, gold, silver, all that stuff. Real estate, I was really into real estate. So you just give me a topic and we're gonna pull up a news story and then I'll ask you a couple questions. I'll talk about it, you know.
All right, let's talk about the impact of interest rates and inventory on the US housing market.
Perfect. All right. So what do you think, and real quick, while I'm looking up the story to go along with that, you're an investor in real estate. So let's talk about that. Like, give me just a brief background of your real estate history. I know you're buying right now pretty aggressively. So what's that while I'm looking this up?
So my background is I bought my first property in 2005, and that was just before the '08 crash, which was not good.
Yeah.
But it was a bit different in the UK because you could get 100% mortgages, which was crazy. In fact, they did 110% mortgages at one period of time,
Yep.
which is insane.
Totally.
Yeah. So I was just buying 100% mortgages.
Yep.
I'm doing a little bit of renovation, refinance, go on to the next one, which I didn't even need to do because it was 100%, but that's what I was doing. And I was just building up my portfolio. But then when '08 hit, it hit hard.
Yep.
And I learned a couple of things, and that was around smaller properties.
Yep.
They get hit big time. And I had a lot of the smaller ones.
They do.
But yeah, I mean, just over the years, I mean, you've been to my new place now.
It's awesome.
Yeah.
I can't wait to go stay the night over there. It's gonna be awesome.
Yeah. Well, I paid 40% below, asking on that. And then when the work's done, it's going to double the value for what I paid from it.
Well, check this out. I've already got a news story up.
Yeah,
Give me
go ahead.
again. I'm going to use your current property without a lot of details as an example, as per also smaller properties, cheaper properties. What year did you say you bought your first rental in?
2005.
Perfect. All right, here we go, guys. So this story comes out of the Denver Post, and it's entitled, Not So Hot July. Low inventory and interest rates keep Colorado housing market calm. Now, as the story is uploading, this is what you need to understand. When interest rates rise, it puts people literally in a prison in their own home. Why? Because as rates rise, subsequently, home prices rise during a blow-off top in price. The reason why is because there's a lot of FOMO. People diving in, they believe what their real estate agent tells them or their loan broker tells them. If you don't get in now, you're not going to be able to afford it. And so they figure out creative ways, whether it be adjustable rate mortgages, 40-year mortgages, maybe even sometimes 50-year, unconventional loans, right? Just to get in, figuring at some point it's going to come down. But that's the trap. Check this out. This is out of Colorado, denverpost.com. Colorado's housing market remained relatively stable in July due to higher interest rates and limited available homes. The latest market trends housing report from the Colorado Association of Realtors shows single-family home inventories in the seven county Denver metro area dropped 3% between June and July and is 28% lower than in July of 2022. Why is this? It's dropping because there are fewer people that can literally sell their house and take that money from their home and buy the next door neighbor's house. Why? Because the interest rates have risen, which means, and the property values have risen, which means the taxes have risen, and also you have higher HOA issues, things like that. And there's also what a lot of people don't realize is, have you ever had any type of fixed utilities where a cost is a certain cost until you renew it, or anything like that. That happens a lot in real estate. And those are extra costs that people don't realize. One being homeowners insurance. They don't just turn around and, if you pay 6 months in advance or a year in advance, they don't just change it halfway through. Well, right now we're starting to see a massive impact on around our country, and I believe you're going to start seeing it in Europe. Tell me if I'm not. Insurance companies are pulling out because of the cost of replacement is getting too much between repairs and stuff.
Yeah.
So we're starting to see that. So that correlation between the interest rates and the it's a very unknown, and I don't understand why people can't see it. Fact between interest rates rising and low inventory, it's because people have become imprisoned. That exact same thing happened in 2005. And the reason why is because the Federal Reserve started raising rates. In mid-2003, 2004, they started raising rates, and they brought prime from, I want to say it was 0.5 point to 4.5. That's off the top of my head. But that brought mortgage rates back up to that 7% range. Now, what's interesting, I bought my first rental in 2001 at 7.25 for my first rental property. By the time it tracked down after the dot-com bust and they dropped rates, we saw rates around 4.95, maybe 5.25 for a non, we weren't living in the home. We were going to rent it out. By the time it hits at 7.25%, there's something that happens in a market where it starts to send people into sort of this frenzy. At least it's been like that in the last 2 cycles. And they don't understand, because they think that since their neighbor's house sold super fast because it was priced right, that the market's doing good and the prices are high. What they don't realize is right behind all of those homes that aren't selling are a bunch of foreclosures. So now let me ask you this. When you started to see that bottom fall out, well, you probably started really noticing it in 2008, correct? All right. Did you hold on to your rentals during that time?
Yeah, I did.
Yeah.
I did.
What were some issues with that?
The issues were I had to self-fund a lot of, so I was making a profit previously.
Yep.
But then because we don't have in the UK 30-year mortgages, etc. They refinance every 2 to 5 years.
Yeah.
Which is tough. And they refinance, I was going from a rate down here to up here.
Yeah.
So I was going from 100, 200 pounds profit per month per house to all of a sudden, I've got to put 150 pounds in to each one.
Yep.
And I just had to make that up with my military, because I was a soldier.
Yeah.
I had to do it with that. But luckily I had a fallback because I released a lot of equity.
Yeah.
So I had a pot of money, but it burned through a lot of it.
Totally.
But I was young. I was young then, so I didn't really understand a lot of this stuff.
Okay.
It was only later on that I was like, okay, that will never happen again. I'm one of these people, I'll make a mistake once.
Yep.
Never happen again.
So
ever.
glad you just said that,
Yeah.
because you are a very small fraction of the human race, right? Being prepared and not scared. Okay, now here's the question. Do loans still work the same way today as they did in 2008? Meaning that people need to refinance after a certain amount of time.
Yeah.
All right, and what's the average time you have to refinance?
I would say it's about 3 years in the UK.
Isn't that insane?
Yeah.
Okay, so here you might have done this work already. What type or how many people rushed into the housing market in Europe, in Ireland, in anywhere around here when the pandemic started? What would you say? Have you ever looked into that?
Yeah,
in America,
it's
a ton
mixed.
of people pushed in.
It's mixed.
Okay.
You had a lot of people that were very fearful, and they were like, the market's going to crash. Then you had a lot of people that were going, well, these rates are crazy. I can get, because there were a couple of mortgages that did a 10-year rate.
Oh.
Yeah. So
okay.
I have 10-year rates on my rentals.
Oh, that's excellent.
Yeah, yeah.
That's totally out of line.
Yeah.
That's weird.
Now the property I just bought.
Yeah.
The max I could get was 5 years.
Wow.
And that was at 2.9%.
Yeah.
But inflation was 12, 13% when I got that.
Totally.
So I went, hold on, I'm going to gain 10% profit.
Yep.
Just from taking a mortgage instead of using cash.
Yep.
So that's what I did. It made perfect sense.
But I know you well enough, and I know you already have a plan to pay it off before that 5 years hits.
Yeah, yeah. Well,
yeah.
I'll watch it.
Yeah.
But it doesn't make sense because the UK inflation is still crazy high.
Yep.
If you think of the G20, it's one of the worst in terms of a developed nation. So I'm still making a profit. I don't need to touch that mortgage right now.
Totally. So here's the question. How many people since the year 2019, 2020, do you think bought a home not expecting that they were going to have to refinance at an interest rate that's literally 300% higher?
Yeah, most people.
Yeah.
Because they don't, a lot of people will bury. You know, I'm not being disrespectful because I'm sure
No,
there'll be
a
people
fact
watching.
is a fact.
Yeah,
Fact is a fact.
There'll be people watching thinking I am, but
Yeah.
I'm not because I get it. I get human nature.
Yep.
And it's the same I always talk about. Everyone's where they are in life.
Yep.
Based on past decisions, belief systems,
Knowledge,
and everything else.
yep.
Yeah. And, you know, so you can't ever blame someone for where they are and the fact that they might bury their head in the sand.
Totally.
You know, you think of people, family and kids, and how stressed out you are. You know, the average person, you get home,
Yep.
and the kids are going crazy. You got to cook dinner. You got to do this. Oh, I got to clean. I got to do that.
Yeah.
You got no time to go, you know what, I'm going to sit down for 2 hours and I'm going to figure all this stuff out about interest rates and should I buy. No, people, they're so stressed and running around that this is just how it is.
You know, another interesting point is the people that do think about it, they usually go to their real estate agent or their lender and say, hey, in a couple of years, I got to refinance. What do you think? And they all say the same thing. Oh, don't worry, they're going to lower rates. They're going to lower rates.
Yeah.
And the reason why they say that is because throughout history, they always do.
Yeah.
However, it never happens in the cycle because they don't start lowering rates until everything's crashing down. Because central banks do not want to be the blame for further future inflation. So they want to be, you know, when things are crashing, then we'll lower it and we'll be the savior. You know, and that's something that most people don't understand. So this brings me back to the point you made earlier of the low-end houses crash. Now, there's two types of crash. During a real estate cycle, as everything's coming down, your higher-end properties that were purchased by middle to upper middle class always collapse. These are the properties in America that a couple years ago were $1 million to $2 million. These are properties that were always over leveraged. They're the fake millionaires next door that you think are rich. They don't own any other homes. On the flip side is exactly what you said. It's the people that bought the lower end homes, which at the end are always good because more people can afford them. But the problem is they get leveraged so much, they have so much downside on the other side because of how they're losing them. So in essence, that's my challenge video. What do you think?
Good. I think you passed.
I passed? Do you think I could sell a course on real estate? I'll put an 80% off link below. No, but I mean, that's how and it's fun. I've always wanted to do one of these videos, and it's cool because I didn't know how aggressive you were with real estate until I came here to check out some of your places. And it's really cool. Now you've got me thinking about what I'm going to do next in my moves. That's pretty exciting. Yeah. You know, but we'll leave that for another video.
All right.
All right. With that being said, the Economic Ninja is out.